Well, Citi has come out with a very interesting note on what to watch out for in 2021. They're talking about the recovery trade and they're comparing it versus the valuation argument. What they're saying is that a lot of positives have played out as far as markets are concerned. COVID trends, recovery, vaccine, weaker dollar, second quarter earnings surprise, all of these have actually paid out in the past few months. Going forward, what is it that they see could be a key support for markets? And it's the much wanted argument that is liquidity support could be the key driver from the current levels or above the current valuations at which markets are. What they are saying is that they have maintained their December 2021 Nifty target of 13,000. Their bull case for the Nifty is 14,500, while if you're talking about the bear case, it's at around 11,500. Their key overweights are financials and telecoms, while on the other hand, what they believe could be key risk to their view is the continued liquidity surge and the better than anticipated recovery as far as the earnings are concerned. They're talking about some of the key themes. They believe that there are 7 key themes that are likely to drive Indian markets. What they're saying is that number 1, the pent-up demand, and they're expecting recovery to accelerate. Number 2, they're talking about the government push for both infra as well as domestic manufacturing. Number 3, they're talking about margin surprises, return on equity surprises, as well as EPS upgrades that would come in from earnings going forward. Number 4, what they're saying is that it is now time for midcaps to catch up in the near term. There is room as far as midcaps are concerned. What they're saying as far as the 5th point is concerned is that they're talking about the weaker dollar, and they believe that the weaker dollar is something that could lead to more FFII flows into the Indian markets. They're also talking about how ESG, that would be the 6th point, gaining more relevance as it gets more embedded in the investing process. So environmental and social concerns is something that they believe will have significant relevance going forward. Lastly, what they believe is that valuations, even though they are at elevated values, they believe that this could be the new normal. And again, this is something they believe could be quite positive. In terms of their model portfolio, they are continuing to seeing opportunities as far as financials, telecoms, select industrials and materials are concerned, and also the property market. On the other hand, they are remaining underweight on consumer, particularly on consumer staples. At this point of time, IT and Pharma, which have been the favorite sectors as far as 2020 is concerned, they are quite neutral on this particular space with very stock specific focus. They believe that in terms of sectors, particular sectors could continue to see trading upside. They are saying that in case of margins, they believe optimism in the broader market has gone up, given the fact that earnings were a bit of a surprise in second quarter, mainly driven up by cost controls.